What's very unique about paddle is that it's a sport that is easy to learn but hard to master. Looking at the demographics of who's playing paddle in the US right now, it's becoming kind of like the new networking, right? A lot of people now are going to play paddle in Miami or New York or LA instead of going to play golf, right? For networking, and there's a lot of events from VCs and different groups running paddle events.
Over the next hour, we're going to unpack how Sunrise Padel Capital is investing in padel and pickleball courts all across the US. And for those of you who haven't been following, padel is a global phenomenon with over 30 million players across the world, growing 25% annually. But the opportunity is that there's only about 1,000 courts in the entire United States. So it's early in what feels like a huge opportunity, and Sunrise just deployed $2.3 million via their pilot for Fund 1 and is raising another $25 million to hyperscale their investments. So I'm thrilled to welcome Diego Campos, managing partner from Sunrise. Diego, so welcome to the Road to Carry webinar. To kick off, it'd be great if you can tell us a little bit about yourself, what is padel, and how you got involved in the sport.
Absolutely. Thanks for having me, Edwin, and hi, everybody. And for those of you that don't know the sport, paddle was invented in Mexico. So not a lot of people know this, in Acapulco in the late 70s. And one of the reasons that was invented is because this guy, he wanted to play a tennis court in his backyard, and he didn't have enough space to put a tennis court. So he decided to put a wall and make it a little smaller, and basically created this sport that is a combination of squash and tennis together. And over the last decades, it grew a lot in Spain, in France, Italy, Argentina, in different markets, and we are just starting to see the boom in the US, which is very exciting, and we'll talk a little more about that. And just to give everybody a little bit context about my background, I'm originally from Mexico City. Grew up playing competitive tennis, moved to the US to play Division I college tennis. And as not every, but like a lot of retired tennis players, switched to paddle several years ago. But my background mostly comes from, in the past, before being full-time on this, working at different tech companies, all the way from a startup to some large SaaS companies like Salesforce and Adobe, across different roles from go-to-market, operations, and strategic finance. But more specifically of why we're here today, I started getting involved in the paddle space, first of all, like as a passionate player, which I really fall in love with the sport. And then I started getting involved just on the angel side, doing some angel investments, because I saw the opportunity very early on in North America to start doing some investments, start getting some data on unit economics in the clubs, learn more about the industry, and then saw the big potential of what we're doing today and where we are in the stage in the market. And we'll definitely talk more about it.
Yeah, we're definitely going to talk more about the unit economics and everything. But so before we get into it, what's like the single most exciting thing about investing in padel today that this audience should walk away with?
Yeah, I think it's hard to find an opportunity to invest in something that is both a business and movement worldwide. And in the US, we're still in the early stages. And you mentioned that at the beginning, where right now we have about 800 paddle courts in the US, which is nothing, right, compared to other countries like Spain, for example, that have 16,000 courts, with a population size of 32 million, right, versus the US over 200 million. So it's very exciting to be in the early stages in the US of what's already a global sport. And no, it's not only a sport. We're starting to see more of a lifestyle movement as well, and we'll talk a little bit more about that. So I always say that paddle has the growth profile of a startup mixed with the longevity of a sport and the community power of a lifestyle brand. So that combination, we don't see that very often, and that translates into high utilization rates for the clubs, recurring revenue, and building out spaces that people actually want to spend time in, right? So that's what makes this very exciting.
Yeah, no, that's great. And you mentioned that US is kind of in the early innings of it all. And I'm curious, so like what's kind of driven all the adoption in Europe, and like what kind of similarities and differences do you see as kind of the adoption in the US kind of continues to grow?
Yeah, that's a good question. So in Europe, the adoption in the past has been more demand-led. So it was kind of like spread fast. For example, in Spain, it was more grassroots and player-driven. In the US right now, what's getting in the States is a little more supply-led, in the sense that right now we're building the infrastructure in different cities and new markets to meet what's clearly an upcoming rising demand. And what's something different from the US market compared to other countries is that overall, I think the Americans, they expect a little bit of a higher quality product. So that means have separate amenities as well, not only paddle courts, right? We typically now start seeing clubs with a wellness area, right? Called plunges, sauna, maybe add like physical therapy in there. Typically, you have your food and beverage components, and also a little more robust programming, right? Which tends to lead to higher revenue per member, and just basically a more sophisticated business model from day one compared to other markets, right? So it's more about creating that next generation of like social sports clubs.
Yeah, I mean, I think we've seen some parallels with golf, for example. Like Top Golf is supposed to be kind of a outdoor leisure experience, and it sounds like there's a little bit of like a membership component to what you're building here as well. So like, for the benefit of the audience, like as you think about kind of what pedal could become as an investment kind of opportunity, like what's the parallel that you would draw in like other sports? Obviously, there's been a lot of interest in like soccer, football, golf. Like what's like what would you pick as like the parallel sport?
Yeah, it's tough because like paddle is unique, so we see different elements from what happened like in different sports. For example, you mentioned Top Golf, and what Top Golf did for golf, it was they took these traditional sports and made it more approachable, social, and fun. And I think paddle is doing that for racket sports, right? So what necessarily about performance, a lot of it's about also having fun and participation and building the community. But similar to soccer that you mentioned, it's also inclusive in the sense that anyone can play it, right? You don't have to train for years to really become a master of it, kind of like tennis. So it makes it very easy for new players to start enjoying the sport without having to spend hours and hours on the courts. And that accessibility like really creates kind of like a network effect to have people bring their friends and family, and suddenly just not a hobby, and sports becomes part of the social life as well, right? From the business side, I mean, I'm not an expert on Top Golf, but what we see in paddle, we see just like a lot of repeat usage, right? Once a new player tries the sport, we see very high return rates into the facilities. We see really a strong emotional engagement into the sport. And then we talk about monetization besides just booking the core, right? Food and beverage, events. For example, there's some, and we'll talk a little bit more about the unit economics of a club, but we've seen clubs in different countries, for example, in London, making over 1 million euros in just corporate events, right, per year. So it's becoming this also like this new networking, sports and compared to golf, for example.
Yeah, I'm gonna put a finance head here a little bit, and it sounds like it's demographics wise, it's accessible to a lot of people, so presumably large TAM, and it sounds like recurring revenue, which we can talk about, and great unit economics, which I always write about in my newsletter. But yeah, we'll go into that. So before we go into the Sunrise model, I'm curious, like just zooming out, at least in the US, I think it's in the early stages of kind of growth and investments.
Mm-hmm.
And you're in the middle of that and kind of pioneering it. So like when we think about the investors in the US, do you see any like traditional private equity firms, like, or is it mostly family offices, individuals, high net worth investors? Like, who's in the mix today?
Yeah, that's a good question. So in the US right now, it's been mostly like high net worth individuals that they fall in love with the sport and they want to see growth and they want to be be a part of it. When we talking to family offices, for example, outside the US, they see the potential, right? Because they already see what happened already in their country. So like those conversations are easier versus like a family in the US where most of the time you have to explain it, like, first of all, what's a sport and what's opportunity in the industry, and they know nothing about. I gotta say, it has changed a lot over the last 12 months. Now, in my conversations, majority of people have already heard about paddle versus 12 months ago. That wasn't the case, right? In the US. So it's still in the US, we see mostly family offices and kind of individuals. We started to see some institutional money going into a few like leading operators, but nothing compared to what we've seen in other markets, like, for example, France, where there's now PE groups doing roll-ups and acquiring clubs, and similar in Spain, right? So in the US, it's been still mostly just kind of individual family offices, and it's just a matter of time until we see more institutional investors get into the space.
Yeah, I think this is one of the rare occasions where kind of US is lagging behind in Europe in terms of PE investments. It's typically the reverse of, there's a roll-up happening in the US, and then, the European folks kind of eventually kind of copy that model. So that's interesting. Well, so I guess let's transition to the Sunrise, kind of the story and the model. I'd love to hear just kind of, you guys just wrapped up, fund 1 and are raising fund 2. And just thinking about the scale difference, right? The fund 1 was around $2 million, and now you guys are trying to hyperscale it in with 10x, 25 million target size for the fund. So just walk us kind of through the thesis, behind starting fund 1. What were you guys testing, and kind of what was the outcome of those tests that made you that gave you the conviction to kind of scaled it to fund 2?
Yeah. So the first fund, it was more of like our proof of concept phase, right? We wanted to test different things. First of all, we want to test the strength of the paddle business in the US and the potential. We want to test the economics at the unit level, and also the scalability of our investment platform, right? What we're trying to do. And we want to understand how paddle performs across different markets inside the US, from established racket cities and paddle cities like Miami, which is like the most like mature market in the US when it comes to paddle, looking at just club facilities, to new emerging cities like Denver, for example, where now it's starting to become a little bit of a paddle hub with 5 clubs in the pipeline. So we just wanted to test different markets inside the US, and we wanted to test different formats, right? Where we have a standalone paddle facility, we have mixed use with Pickleball, for example, and we have also different type of product offerings, where more high-end type of very downtown strategic locations, expensive, more kind of like members only type of club, to a little bit more on the other end, it's like a little more entry level, try to democratize in central markets, and mix with pickle, for example, to use the volume of pickleball that paddle doesn't have right now in the US, right? When you want to introduce the sport into a new community. What's basically what we built is just like a diversified portfolio of early clubs to just collect the data, right? On okay, what's utilization rates we're seeing across the US, what's the revenue per court, how much can really a club afford a lease or a real estate acquisitions, look at the food and beverage performance, understand better, like, hey, should we outsource this and partner with somebody locally, look at the community engagements, test different pricing models, etc., right? And what we
and if you don't mind, sorry to interrupt, like, it's just for the benefit of the audience, can you just kind of walk us through like the footprint today?
Yeah, so we've done 9 investments today on the club sides, from what we call primary markets like Miami or like in LA or Chicago, to secondary markets like Arizona and Tucson, Denver, 2 investments in Houston, another one in New Jersey in the suburbs. So yeah, that's kind of like the footprint today, right? 2 in Miami, 2 investments in Miami, 1 in LA, 1 in Arizona, 1 in New Jersey, 2 in Houston, 1 in Denver, and 1 in Chicago.
Got it. That's helpful. So why don't we go into like the unit economics of it? I'm sure everyone kind of attending is super curious. So maybe this kind of touching on one of the kind of primary locations, whether it's Miami, LA, or Chicago. I'd love to just hear, like what's the upfront capex, like payback period, cash flow yield, all of those stuff, whatever you can share.
Yeah, absolutely. So at the beginning, it's a very like capex intensive business, as you can imagine. We're starting to see the typical cost to develop a facility. Obviously, there's a lot of variations, right? The locations, the size, the improvements that you have to make into the place. But on average, a good number of the capex around 2 million. And typically, let's say 2 million, let's on average like a 5-core facility. We expect the revenues once it goes to the ramp ups to be around 2 to 2.5 million. And typically we see operating margins around 30 to 35%. So that will put us around 700, 750 EBITDA. And this translates into over a 20% free cash flow yield on the invested capital. So that's pretty high compared to other experiential sports or leisure businesses based on what we've seen, right? So that's high level review. That's kind of like the economics of the clubs. Typically paybacks are under 2 years. So depending on the markets, something like a more mature market, I would say under 2 years. Let's say you're introducing the sports in a new market, I will be more conservative and closer to 2 years for payback.
Yeah, that's interesting. So 20% unlevered yield, right? Like assuming this is all equity.
Correct.
And it costs $2 million to build out a facility. And I think probably depending on how much leverage you put on it, I'm guessing it could go up to 30, 40%. I mean, just thinking about like my experience with Topgolf, like I was fascinated by just how much of a cash flow machine it is once it's kind of at maturity. Obviously the problem there is it's an multi 8-figure dollar investment to build one out. What about in terms of like how long it takes to build out a facility, to get all the permits and everything, and then related to that, like how long does it typically take to kind of get the visits to maturity?
Yeah, so that's very unique to the US compared to other markets, that the barrier of entry is very difficult. So to open a club, it typically takes over 1 year. Because keep in mind that, let's say you find this unicorn location, right? That it has the right ceiling height, the right column spacing, and that's something that not everybody knows. But like paddle, you need very good, clear ceiling height to for the playing experience. So in the US, a lot of the workhouses in good locations, they have low ceiling heights. That is not, it might be a good fit for pickleball, but it's not a fit for paddle, right? But let's say you find this perfect location. Good luck convincing the landlord that, hey, you're going to be a paddle facility as a tenant, that they don't know anything about the industry, right?
Mm-hmm.
So it just becomes, it takes a lot of time to go through that educational process with the landlord and say like, hey, these businesses are very cash flow positive, like they can afford the rent. And obviously then some landlords are like, okay, then I'll just, I see this a little more risk because I don't know anything about this business. So I'm going to put a premium on the lease, or I'm going to ask you more, prepay rent up front, etc. So obviously every commercial deal is different, but that's, let's say you get through that hurdle of first securing the site, and then you start working with the city on permits, and then suddenly they look at the plans and you go through, zoning and everything. And they're like, oh, what is this wall here in the middle of, what's this glass here in the middle of the facility? It's like, oh, that's part of the court. And, they just don't know, like, right. They've never seen that before. So you just have to go through that.
Just a lot of education. Yeah.
A lot of education, which takes time. But also on average, I mean, it's long answer to your question, but on average, I would say over a year.
So over a year to just kind of launch a space. What about like, to get to kind of full utilization? Like how long does that typically take?
So ramp ups are typically on a new market, I would say operators should give themselves up to 12 months because it takes time to build that community. If you open one in Miami today, the ramp up will be a month and a half in a good location, right? So it just really depends on how mature the market is. But the mistake that a lot of people do is they come to Miami and they just show up to the club at 3 o'clock, and it's like, oh, it's full. Because apparently, like, nobody's working here, and just everybody's playing paddle. And they start making some numbers. Oh, they're making, whatever, 3,000 a day, 5,000. So this is generating 300K a month. I'm gonna go and build this out in my hometown, and they expect that they're gonna have the same occupancy, and no, it's gonna take years, right? So they just have to be in new markets very conservative about how they underwrite businesses.
Yeah. It's funny. I was actually in Miami this past weekend. I should have reached out to you, but it's
Yeah.
definitely a unique population of people down there. To your point, a lot of money and a lot of flexibility when it comes to just daily managing time.
Right.
So I'm curious. So sounds like like the unit economics are great. Obviously, there's capex involved and some risk associated with kind of ramp ups and everything. And I'm curious, like, what are some of the kind of cost drivers once things have ramped up, and like just like what are some operational kind of challenges that you see from kind of day-to-day management of the courts, or maybe the answer is like once it's kind of fully matured, it's very passive. I'm curious to hear about that.
Yeah, so I think the biggest challenges of cost drivers obviously are construction, and just like the lease. But the biggest operational challenges have been, to be honest, just permits. That's what been taking a lot of time, and a lot of projects get delayed. I think just building clubs here is just way more complex in other markets compared to Europe or LATAM. It's just very expensive to go to the permit process, securing the leases, doing the indoor construction, or if it's outdoors, doing the build outs. And that can add up very quickly. And it's just something that's very important. I think the OPEX is very low once you start operating, right? Typically coaches are revenue share, then you have some front desk staff, and then which are typically like hourly wage. And then you need like a good GM and a good head coach. But the payroll is not huge compared to other businesses, but it just all comes down to having the right team, because it's also kind of like a hospitality business. So you need to have the right team in place to build that community, engage with the members, engage with the customers, and really make this more of a hospitality business, right? Rather than you just come and play and you leave. So that's kind of like the big difference that we've seen.
Yeah. Yeah, that makes sense. So has 100% of your investments been kind of de novo new courts, or have you acquired kind of existing courts as well?
So right now they've been all new ones. To be honest, just because there's still not that many that you can go and acquire. I think
Yeah.
we're looking at a few opportunities right now of existing like tennis clubs or like multi-sport facility, and just repurpose it and add some paddle in there. But we haven't seen that many opportunities of acquiring an existing paddle club, and then doing improving operations, etc. from there. I think that's a matter of time. That's obviously we'll start seeing more of that in the next 5 years or so. But I think right now it's still a little bit too early.
Yeah. This is actually not a question that I think I don't think I flashed just one by you, but as you think about kind of at exit, right? Eventually the market's going to mature, and there's going to be a kind of buyer seller marketplace, just like in any other industries. Do you think this trades like on an EBITDA basis, and like, I'm curious like what you guys are underwriting to at exit, like, what's the multiple that you eventually kind of foresee with a business like this?
Yeah, so we've been talking to a bunch of leading operators in other countries like Spain, France, or LATAM, and eventually it's not happening here in the US too. You're gonna start seeing a consolidation, right? From leading operators or from different groups trying to get into the space, or like doing a private equity group coming in and just doing a roll-up of several clubs. They typically depends on the market, but let's say in Spain they're about 5 to 6x EBITDA, more or less. In other markets are closer to like 8 to 10x. So we're being conservative, and we're underwriting at 5x, where most likely I think we can get to like 8 to 10. Yeah, that's what we are underwriting right now.
Yeah, I mean, I can tell you that Callaway paid mid-teens for Topgolf, so you guys can aim for that one.
Right. True.
Yeah. So before we keep talking about kind of, Sunrise and your second fund, actually, I want to touch on one thing here. Like, I'd be curious, just like on your personal side, right? You've obviously, spent time. This was a passion project for you when you started out with some angel investing. You're working full time, and now you're doing this full time, to focus on, Sunrise. Like, what's been your biggest surprise, since kind of leaving your day job to kind of put your heart and mind, 100% of your heart and mind into this?
Yeah, so I never did I never raised money before, so I think that's definitely the most challenging thing I've done in my career, but I think also like one of the most rewarding things. And I think just my biggest surprise is just being how fast things have been moving. We start with an idea, and then suddenly, we wanted to professionalize investing in paddle in the US, right? And that has turned now into a real ecosystem of what we're working on for our second fund. And first we thought we had to like convince people that paddle was investable, and I just surprised at how much has changed in the last 12 months. Where at the beginning, as I mentioned, we just were in a lot of conversations with people that were not aware of it, and that has changed a lot. So that makes it like very, very exciting. And now we just have a lot of interest from investors and also from operators, right, to partner with us. And I think something that has been very exciting, and we just didn't think about this at the beginning, is now we're positioning to helping shape the industry and the market, right? Which that's kind of the most exciting and unexpected part of this journey.
There's a whole green field of opportunities, and you guys are shaping up, what it could be. So that's great. And do you think it's like a pretty tight knit community today, like, or do you kind of know everyone in the industry, or do you kind of see new people here and there? Like, just curious, like how small the circle is today.
Right now in the US is like fairly small. So when we go to any events, we always see the same people.
Yeah.
It's starting to change a little more. There's now different events in the industry, like the professional paddle league that they did in New York last weekend. That's helps just bring people interested in the sport and get exposure to it. But since we're still very small right now, we just still like a tight community, and I'd be surprised too that everybody's so passionate about it that we all want to do what's best for the sport, and we see this like a very collaborative industry so far. Maybe that changes in the future, but that's a question that we get sometimes from players. It's like, oh, I heard there's gonna be another club opening in town, and we always like, that's great. Let's help them out. Like, let's work on building a community together, and let's do some intra club leagues. And that's what we need right now in the US, right? We need to support each other and just help grow the sport. So maybe we can get to where Spain is today, right, in the next 5 to 10 years.
Yeah, like the community aspect of it sounds like there's still a lot to go around, and the pie continues to grow. So people are collaborating. That's great to hear.
Yeah.
So let's talk about Fund 2 and kind of the go forward. So now that you guys kind of prove out the unit economics in Fund 1, like, what are your goals with Fund 2? Obviously, it's a much bigger scale of a fund. Like, what are you guys looking to do? Is it more clubs, other investments? Like, what's the play?
Yeah, now we're focusing on a vertical integrated platform. The majority, 60% of the allocation is still going to go into new clubs development, because that's what the industry needs right now in the US for any other business in the US around paddle to really thrive, right? We need to grow the best base layer of the pyramid, which is the amateur player, right? And how you grow that via clubs. So still 60% of it's going to go into clubs development, and also because what we see right now in the next 12 to 24 months, if we don't invest heavily on that layer, eventually there's going to be more institutional money going to the sport, and valuations are going to go up, and the type of returns that we are aiming for, we're not going to be able to get that in 5 years, right? Because people start throwing money at clubs, become passion investments, they start raising money based on future cash flows, etc. Now the other allocation that we're doing now is 20% into tech, just because we realize there's a big gap there and a big opportunity. that obviously they need to complement all the investments in the portfolio together, right? There needs to be some synergies. And then on the tech side, the 2 tech investments that I already did, we're gonna add it into all our portfolio investments on the club side, right?
Well, what are some of the tech investments like, that you guys have done?
Yeah, so one's called Clutch AI, like this AI powered cameras that record your matches, but not only record your matches, it'll give you the highlights of the best points based on AI, give you the analytics of movements, shot placements, unforced errors, tells you like who's the MVP of the match, and you can like share to your friends that like, oh, you thought you were the best.
And gamified a little bit. Yeah.
Look at the data, like, and they're building like a coach system. They have some really cool stuff in the roadmap, and it's kind of like a Strava for paddle. So obviously we'll add it into any club that we are investing and partnering up. And another one is that something that every club needs is a booking system and a CRM, right? So we're very excited to invest in this company right now. They're still early stage. They have about 250 clubs worldwide using the platform, but the team, they already have like 2 successful exits, and then they've been in the paddle space for over 20 years. So they're actually the very early adopters in Spain, which now is the more mature market, and they're probably the most knowledgeable people in the industry. So we're very excited to partner with them and also just help them grow in the US and in this market.
Yeah, so it's kind of it's interesting. So the fund is almost like a combination of like VC investments in tech, a little bit of like real estate in terms of just the footprint, and then obviously like running the clubs and everything is more kind of traditional services, PE. So it's like a mix of everything.
Correct. And the last part that I mentioned, the last 20%, we're looking at ecosystem, things in the ecosystem. So we're looking at a couple like infrastructure plays, right? That we can add that infrastructure into all the facilities. And we're looking at on the professionalization of the sport, not at the professional level, but more of the amateur level, how we can help grow it through amateur leagues across the US, kind of like the USTA leagues, but for paddle. Like we're looking at a couple of things like that. That's also just complement really well with the club's investment, right? So we can use our clubs kind of like at the host cities and all that.
Yeah, definitely. Like developed in the amateurs and the youth sports. I mean, you've seen this with soccer, I guess, like football if you're European. Like, just how big it's gotten, in the U.S. As well. I mean, that obviously took a long time and a lot of capital actually from investors to make that happen.
Yeah.
What about from like branding standpoint? As I understand, the locations are all kind of its own brand today. Like if you roll forward 5 years, like are we just gonna have like I don't know, Sunrise Padel, across the nation? You just kind of have one booking system. You go to one website. Like how are you guys thinking about it?
Yeah, so right now, so far we took an infrastructure first approach. So we just wanted to prove the model, refine operations, develop this data-driven operational playbook across data that we got from the different markets. But we always got started with the brand lens, where definitely the long term it's developing a brand, but we want to do it more certain like flagship locations, and the rest help grow existing brands and operators that we have partnered with. And we want to try to consolidate at the regional level, not national. It's a sports, the type of business it's not easy to scale nationally, right? So we just want to consolidate at the regional level with certain operators and certain brands. So it's like in Europe, you were trying to build paddle clubs across Europe, from Italy, from France to UK and Spain. So it's just very challenging, right, to scale that way.
So you might have a brand for like Florida, I don't know, for Texas, California, all that. Okay.
And then we have like we're right now developing this brand for more mixed use developments, right? More high-end, mixed with real estate and mixed also with apartment buildings and paddles, part of the amenities of these buildings, right? So we're doing certain brands for certain type of product, right? More high-end versus entry level, etc. So that's something that's still work in progress. So
yeah, I'm sure the vision will continue to evolve, but that's super exciting. Okay, let's pivot here, and I know some of the audience here are interested in like investing in themselves into maybe courts, or maybe even like be an LP in your fund. I don't know, but so if you were to kind of advise a first time investor in this space, like what's your like one advice that you would give them?
Tough question because there's a lot of things, and I've seen probably like 100 performance and business plans over the last 18 months. So I've seen all stuff of crazy stuff. But I would say be careful on where you're looking at. Let's say something very typical. A lot of people look at investing in a paddle club in a facility. So take a look at how they're underwriting the business. Just make sure they're super conservative on what the ramp is going to be the first year, or the second and 5 year, and reaching a maximum of maybe 50% of occupancy if everything goes well. I've just seen some people underwriting the business is like, hey, we need to get to 50% occupancy to break even. I was like, now you're overpaying for the lease, right? And something that just being really careful is look at the lease agreements. Look at when they start paying rent. There's a lot of projects in the country that have been delayed and people have been burning a lot of cash paying rent without being able to open. So that will be a big red flag. Just really look at the lease terms and see how much they de-risk in the lease, negotiating different things.
Got it. And I'm sure like, there's no benchmark of terms out there that you can just kind of go out and look up. So,
yeah, there's no, I mean, right now we have like the largest footprint of investment. Like nobody has invested in 9 paddle facilities. So we do have our own benchmarks now that we utilize based on those 9 investments, and also based on all the different performance and all the different, due diligence that we have done over the past 18 months. But that's kind of a little bit our secret sauce, right? That we just kind of develop over time.
Yeah, I won't ask you about those, so you can keep the secrets. Right. So and as you look, 3, 4, 5 years out, like how do you see this like an asset class evolving over time?
Yeah, I mean, I think in the US is gonna be recognized as a very legitimate institutional asset class. A combination, it will be a combination of an asset class between like sports, hospitality, and real estate. And as the market mature, we're going to see more professional operators, more brand consolidations, more institutional capital going into the space. And I think we're going to see something similar what happened to other boutique fitness or experiential leisure businesses in the country. So we're definitely going to see moving from a few quality dozens clubs right now in the US to hundreds of well-capitalized clubs and ventures in the space. And that will translate into investors valuing this business at the same seriousness as golf or pickleball, right? Or other boutique wellness brands like Solid Core, Soul Cycle, something like that.
Mm-hmm. Mm-hmm. Yeah. That'd be a great opportunity. You're early in this, so if the ecosystem can mature, that'd be great.
Yeah, that's I'm betting my career on that, so I hope so.
Yeah, I mean, I think it's a great idea, which is why it's so fascinating to have this conversation today. And hopefully, when you look back in 5 years in this conversation, hopefully it'd be like a very positive memory to reflect back on it. I just wanted to close out with kind of rapid fire questions. Diego, I know we didn't talk about this, so like just whatever comes off the top of your head, I want to aim for like 15, 20-second responses. Okay. So 3 questions. I'll go. The first question is, if you aren't doing this, what business would you want to run next?
Hospitality business. I just love traveling and love hospitality. So I don't know, like running like a boutique hotel with sports and paddle or something like that.
Yeah, that sounds like a cool opportunity. All right, second question. In one word, describe what makes a great investor.
What makes a great investor?
Mm-hmm.
One word. Discipline.
You want to elaborate on that?
Like for us, like just try to reduce the noise, right? And be very disciplined on our thesis and what we believe and how this business should be value operated and, you know, how investable they are. So we just being very proud of the discipline that we have passed over the past 18 months on our thesis on what we're building. So just remove the passion of it and just stay focused on our thesis.
Great. I like that word. All right, last question. Is there a book, podcast, or any resource you recommend to aspiring investors or operators, whether for paddle or just in general?
For paddle, I would recommend Beast Paddle. If you want to learn more about the industry, I think Rosa does a great job of just bringing different operators, people in the industry. Or Paddle Smash Academy. It's another one that is very paddle industry specific. For overall, I mean, I listened to a bunch of podcasts from, and I think we were talking about this, from BC20 to Dario Fazio. I listened to a bunch of stuff and read a bunch of stuff, but I probably kind of recommend better paddle specific contents for sure. I think those two will be my two to go to if you want to understand more about the US paddle landscape.
Yeah, that's great. All right. Well, thanks, Diego. Let's move to the Q&A section. So I'll just read out the questions for everyone's benefit. So the first question is, do you think Padel will become the next pickleball in the US despite things like high Capex, low ease of use compared to pickleball, less social aspect, etc.? How do you think about those trade-offs versus pickleball?
So that's a question we get a lot, right? Like, hey, paddle is going to take over pickleball, they compete or not. At the end of the day, there are different demographics when it comes to age, when it comes to what people are looking for in the sport, and also right now, you know, just demographics when it comes to income, right? Paddle is a little more high end, more exclusive compared to pickleball, when you can pay, you know, you can play in a public park. So it just tends to be different people are playing paddle versus pickleball. We don't see like a huge overlap. So I do think it not only can become like the next pickleball, I think can become like the next big racket sport in the US, right? And we've seen for example, Djokovic mentioned in tennis, like his biggest concern is it's his paddle, right? The biggest threat to the sport. I think at the end of the day, tennis is still gonna be the king of racket sports, in the sense that, you know, traditionally has a lot of, you know, it's been hundreds of years since, you know, tennis was invented. So I don't think tennis is going to go, disappear or anything like that. But, you know, paddle is going to take, a big percentage of the players. And we see a high conversion from tennis players into paddle.
Got it. All right. So next question, the next set of questions actually I'm going to try to tie this all together. So looking at Europe as kind of the example of a mature market, what's been like the durability of unit economics there? So that's the first question. And the second question related to that is, and I'm not too familiar with this. Maybe there was like a crash in Sweden where there was too much supply of courts. So like, how do you make sure there's like not too much build up relative to the demand? Or is that a concern, you know, down the road? So those two questions.
Yeah, just to give some context to your audience, like Sweden was the first market to overbuild. Now, what happened in Sweden, I think was very unique, and it's going to be very hard to replicate in other markets for a few reasons. So the overbuild of Sweden was during COVID. In COVID, in Sweden, it was more like open country, and people can still exercise indoors. And you have the factor that Sweden has a lot of warehouses that apparently they were perfectly built for paddle. They have the perfect ceiling height, the perfect column spacing, and they have a lot of empty spaces that landlords were like, yeah, I'm just going to put a paddle club in there. And it went basically from having, I don't know, like thousands of courts in after 6 months, having like 6,000 courts, 7,000 courts. So I grew like exponentially in a matter of like 6 months to a year, very quick. And those factors, they're just not going to replicate in the US, right? Here, like when you look at the warehouses, They're not built for paddle. You're competing against, FedEx, Amazon, or another business that has like 100 commercial lists across the country, and you don't. So the barrier of entry in the US is very, very difficult compared to other markets. So it's hard to, get to a point where we're going to be overbuilt. And something that everybody should think about is what makes this location very unique, right? Can somebody down the road open another facility? Like if I'm in an industrial warehouse area where somebody can come in, and next door in the other warehouse also build a club. Or, hey, I'm actually in a very unique area that in the next 10 to 15 minutes, like driving ratio, nobody can open another facility because it's all residential, right? Or it's all commercial, and they have to go to a Sony, change all that, and it makes it very difficult. So that's something that we're always very careful. We'll look at what's the barrier of entry for somebody else open a facility nearby, right? On, looking at maximum like 20-minute ride.
Yeah, no, that's great. Like, and this next question is also like a little bit more tactical, and hopefully helpful for the audience that are actually trying to do it themselves. So the questions are like, what's the optimal kind of real estate size, and like what are some demographics? You already touched on location, so like demographics that you would look for in the area, and then like the third question is, deciding between paddle courts or pickleball courts. So those three questions.
So the optimal size is about 20,000 square footage. That will give you like 5 paddle courts. That's a good starting point, which will give you enough space to build a community, run good programming, run leagues, run tournaments. The demographics, I would say high income areas. We tend to look also at in a ratio of how many like country tennis clubs or how many boutique fitness clubs are around. Look at the occupancy of those, how much they're paying for, Pilates, solid core, those type of classes. So try to get to an area where it has high demographic, high incomes, and try to identify if there's an active population in the area or not. And the unit economics, and I think you mentioned paddle compared to pickleball, and just so your audience know, playing paddle in the US is very expensive compared to pickleball. We're talking about the average over $100 per hour and a half. We have markets like New York where they charge, 300, 350 certain facilities for an hour and a half. And some, for example, Miami ranges from 120 to 180 to up to 200. Texas is a little bit cheaper in some areas, average 80 to 100. But pickleball, I'm not a pickleball expert, but like some people, they play for free or for $2 in a public park. And the reason is that it's going to be hard for some spaces to change pickle to paddle or put in a public park, just because it's expensive to build a paddle court. The infrastructure around it, is quite a bit more expensive compared to pickleball, right? Pickleball, I think a pickleball court can cost you like $5,000, like a very premium court. Paddle is like between 40 and 50 grand just on the court, plus 10 to 15 to 20 grand on the concrete slab. So like it's expensive, right? So that's why it's just different demographics at the end of the day and different unique economics.
Yeah, and actually one more question related to that: indoor versus outdoor.
90-something percentage of plays in the US should be indoors.
And
you can get away in certain regions to be outdoors, like LA, for example. We have really nice weather, or San Diego all year round. But in paddle, if it rains, it has a turf in the court, so that doesn't dry very quickly. So it rains, you basically have to shut down for the rest of the day, right? Depends if it's heavy rain or not. For example, here in Miami, some clubs, they lose around 40% of revenue because of the rain in the summer months, and also because of the heat, right? People don't want to be playing outdoors at noon during the summer months. The humidity is almost like 100%, right? So just some context, like even the pros, the professionals, they prefer to play indoors because it's a very, how you call it, like very specific, very, like you don't want the wind moving at the ball a little bit because then you might miss it. Like the sun, like it's a game of inches sometimes. Like if the size of the racket is fairly smaller compared to the tennis racket, right? So your sweet spot is smaller, so it's very precise like game, right? That's at the component of win or something like that. It just changes the game a little bit.
Yeah, that makes a lot of sense. So another kind of angle of questions here, now kind of pivoting to people are quite curious about the fundraising aspect of it. So just this being like a relatively unique, at least in the US sport, how do you find like the right investors to fund, your new fund, and like what's your pitch for, like Sunrise Pedal team?
Yeah, so the finding the right investors is always it can be challenging, but it's just also getting the right introductions and get connected to the right people that especially overseas, there's a lot of interest to invest in the sport, and they see the US market like kind of like the next market for paddle. So there's a lot of interest of investors outside the US, and we start to see a little bit more inside the US. And the pitch is like right now we are we have the opportunity to be the largest investor in an emerging sport, which is like the fastest growing sport worldwide, in what's going to become the most important market for paddle in the next 10 years or so. So we have that big opportunity to capitalize that ahead of us.
Yeah, and somebody asked a very tactical question around that, which is, what's the minimum check size to be an LP in your fund?
Yeah, somebody asked that. So the offering is for accredited investors. The minimum check size is 250.
Got it. And eventually, like, as you think about, this is a question for me actually. It sounds like to me there's a ton of opportunity to deploy capital. Even after raising this target of $25 million. Like, as you look forward, like for Fund 3, Fund 4, Fund 5, right? How big of a kind of investment opportunity do you think this is? Like, as you think about like Sunrise, 5 years from now, is it like do you envision like a $50 million fund, like $100 million fund, $500 million fund, and $1 billion fund? Just curious.
Yeah, that's a good question. I think as we grow, our next fund will probably be closer to 50 or 50 to 100, depending on how things are tracking and how things develop. But we're estimating that this could be like a 6 billion industry in the US just on the club side in the next 5 to 10 years, right? Let's say if paddle gets to worst case 10% adoption of pickleball in the US, that's still like a 4 to 6 billion market just on the club side. If we get to where Spain is today, that's even higher, like 10 million, right? Just looking at how much potential revenue these clubs have. So there's still a lot of capital to be deployed in the space over the next 5 to 10 years.
And we're talking only just like the court opportunity, right? Like not around like the tech and
not around tech or consumer goods like the rackets or brands or leagues or anything like that. And just to give you some context, last week there was this fund that just acquired one of the leading paddle racket brands for 100 million. So we start to see different also brands getting into the sport, like Golden Goose in Milan. They just opened a facility there, fully branded Golden Goose. There's rumors that Kacher might do one in Paris. You saw in New York what happened with Kid Ivy announcing with Wilson a facility in the West Village. So we started to see a lot of brands and more money going to the sport. So the market just continues to grow and grow everywhere.
Yeah, that's seems like there's even more opportunity just outside of like the scope of Fund 1 and Fund 2 for you guys.
Right.
Like, what are you underwriting to in terms of like the exit timeline? Like, are you comfortable holding it for a very long time? Like, what's the fund structure? Like, is there like, kind of typical private equity model of you try to exit in 5 years? Is that the target? Like, well, how do you do the underwriting?
Yeah, we underwrite to try to exit after year 5. The first few years, we'll still want to reinvest as much as we can to capitalize on the growth. And then after year 5, we'll start looking at exits. And it's funny enough that we're still very early stage in the US, that we already have other operators reach out to us that they wanted to buy some of our clubs that haven't even opened yet, just because they want to get into that market, right, into that region. So we're going to still see that more and more happen over the next few years, and as people try to consolidate certain markets, it's just a matter of time.
Got it. All right, so I'm gonna see if this works for Carlos. He says his question is too many characters, so let's see if you can. Carlos, can you unmute and say
Hello.
something? Oh, there we go.
Hi. Thank you for the chance. Gracias, Diego, por hablar un poquito con nosotros. Quick question. I play a lot of pickleball. I probably play, I don't know, 3 to 5 times a week here in Texas. Played in Austin, played in Houston. I think you touched on an important part, which is the target demographic of the two sports is quite different, but I think the kind of growth curve is pretty similar. If you disagree, please let me know. But I think the growth curve is similar. Pickleball is just a little bit farther along it.
Yeah.
I definitely resonate with what you've said about the American consumer is really looking for kind of a social club more so. I played pickleball in 4 different countries, and a lot of the U.S. complexes are more, they want a weight room and they want a sauna and they want a bar in addition to, um, the fact that there's a court there. And so I have, a thesis that people are more so looking for just, these kinds of quote unquote third spaces where they can also do athletics more so than, just pickleball or paddle. I'll finally get to my question. What do you think is unique about paddle specifically that's going to provide stickiness, and, the American population broadly is still going to be playing this 20 years from now?
Yeah, so I think great question. So I think what's very unique about paddle is that it's a sport that is easy to learn but hard to master. So people get addicted and keep coming back. And then looking at the demographics of who's playing paddle in the US right now, it's becoming kind of like the new networking, right? A lot of people now are going to play paddle in Miami or New York or LA instead of going to play golf, right, for networking. And there's a lot of events from VCs and different groups running paddle events, right? So besides that, just the stickiness of the sport is compared to pickleball. What we've seen is that it's more challenging, but not as challenging as tennis. So you can still have a lot of fun as you start learning, but it tends to be more of a workout, right? It's more for a little more active people. And I'm not saying that like people that play pickleball are not active, but it just athletic wise, it requires a little more of a challenge, right, compared to pickleball. So we found that people in the 30s and 50s, it's the perfect range for people that they start learning the sport, they use it for like networking, and they fall in love with it, and they just keep coming back and playing more, and it's becoming sticky in their lives.
Yeah, definitely. I resonate. First time I heard about pickleball was actually at a Formula One race. So I guess in kind of summary, a big part of your thesis is paddle will basically become like the de facto like leisure sport for the affluent.
Yeah, so I would say like pickleball, and you mentioned F1, but like pickleball will be more like your NASCAR, and paddle will be kind of like your F1 in the US, right?
Awesome. Thank you so much. And thank you for the opportunity on mute.
Thanks for the question.
Yeah, that's an interesting dichotomy. And I guess that's a wrap for this webinar. Well, Diego, thank you again for taking the time. It was a fascinating, Q&A to hear about what you guys are doing. I think there's a lot of good opportunity ahead of time, ahead of the down the line. And so for everyone's benefit, we'll follow up with Diego's contact information if you're interested in learning more about Sunrise or just paddle in general. So we'll wrap here, and thanks everyone for joining.
Thank you, Edwin. Thank you, everybody.